SPACs are expensive. That phrase has been plastered around the internet lately. And apparently even Jim Cramer says SPACs are expensive. Is he right? Yes and no. But many people are misusing the term SPAC right now, and I'll explain how in just a minute. But first, I'd like to welcome you to Stocks, Tech, and Beer, where we grab a cold one and talk about stocks and technology like we're chilling at a bar, and talking in a way where we hope everyone can understand. And today I'm drinking a Cloud Curtain from the Mountains Walking Brewery in Bozeman, Montana. And here's kind of the, I don't know if you can see it or not. The can's pretty cool looking. There's some words here. The light's a little bright. But, it's their seasonal series. It's a double dry hopped IPA. And they did something a little interesting. They put an oat whip in there. I don't really know what that means, but they tell me it makes it a little smoother. And yeah, they're right. It does make it really smooth. Can't really explain. It's just it's smooth. It's an easy drinking beer, but yeah, it's still got 8% alcohol on it. And it's got a really, really good flavor. Mountains Walking, probably, I think it is a top-rated brewery in Montana, and it really is deserving of that rating. Like, the beers I had there were just absolutely amazing. They had one sour as a blueberry, lemon, something or another, but that was the most potent sour I think I've ever had. Like, you could only drink 4 ounces of it, or at least I only could, because it was just so powerful that it just overwhelmed your taste buds after that. Anything more would just make you extremely full. But yeah, anyways, this Cloud Curtain, it goes down smooth. It's still got a little bit of juice on front on the tongue, and it finishes crisp and clean. A little bit of hops, a little bit of a bready finish, but it is top-notch beer. I'm gonna give this an 8 out of 10. Now, what do I mean when I say pundits like Cramer are using the term SPAC wrong? I mean, first off, Cramer even knows that's not a correct thing to say, and he didn't say that. Some headline writer made that into the title for the video, and he didn't even do his homework. I mean, and from there, the financial media did what it does best, and it spread the message without making sure that's what was actually said in the video. In that video, Cramer was referring to the Palantir IPO, and that was a direct listing. It wasn't even us going public through a SPAC. And he was just talking about stocks in general when he was saying that they were expensive. I mean, to say SPACs are expensive is a bit goofy. I mean, would you say IPOs are expensive? Not really, because they're not. It's a process going public. Like a SPAC is in the process of taking the company public, or hopes to take a company public, and like an IPO is just the initial public offering of a stock. It's not an expensive thing. It's a process. And you have a lot of the media saying stocks like DraftKings and EV car maker Fisker Automotive and Virgin Galactic are expensive, and they're right. But I mean, here's the thing: those companies all went public through a SPAC, but they're no longer a SPAC. They're now a normal company trading on the stock market. The stocks have gone through a complete metamorphosis. I mean, when the stock is a true SPAC, it's trading near the $10 a share that the SPAC, the blank check company, goes public at. And the price moves very slowly like a caterpillar, just inches along, right around $10, $11, just inching along. But then that caterpillar of a SPAC finds a target to merge with and to turn into a publicly traded company. And that courting period from the agreement to being ratified, the SPAC is essentially a chrysalis, and there's changes happening to it slowly. There's changes happening. It gets to be a little more volatile. And once the deal gets finalized, the ticker symbol changes, and from that chrysalis emerges a public company, a butterfly. And that butterfly is ready to fly around at the whims of the market. And that's when the price fluctuates wildly as the company begins trading based upon its fundamentals as a company or on the dreams of the company in all actuality. And just like a caterpillar loses its label as a caterpillar when it emerges as a butterfly, a SPAC should not be called a SPAC after it emerges as a company. But for some reason, people insist on attaching the SPAC label to these companies, and I'm not really sure why. I mean, people don't go around calling companies that go through traditional IPOs forever. It sounds goofy. And so it's like calling SPACs even after they've turned into a company. So be careful how you interpret these calls of SPACs being expensive. When it's truly a SPAC, it's probably not expensive. Unless the SPAC, the real SPAC pre-merger is trading over let's say $12 a share, $12, $13 a share, then the SPAC might actually be expensive. And you could actually kind of see that a week or two ago when Chamath Palihapitiya's latest SPAC, well, you can't even say latest anymore because he just had 3 more, but his IPOC SPAC, when it made its announcement, it was merging with Clover Health on October 6th. It dropped from a high of 13.19 the day before to below 11 in one day. And the market clearly wasn't excited about an insurance company going public, but that just shows that his SPAC was expensive comparative to where it should have been. Like a lot of SPACs, they trade around $10, $11, they announce a merger, they pop up to 13, and then they kind of, people figure out if the company's excited or not, and the valuation from there. And that's what happened when Novus Capital made their merger with App Harvester. I know I mentioned this in previous videos, but it was trading right around $10, $11. It made the merger, popped up to 13, and then it went back down as people are trying to figure out if App Harvester is a legitimate company or not. Now, on the other hand, are SPACs expensive? Absolutely. Some of them are ridiculously expensive. I mean, I've heard people valuing Nikola based upon its 2030 revenues and EBITDA numbers. That's crazy. That's 10 years away. Nobody knows what's going to happen in 5 years, let alone 10 years. Next year is even a question mark. I mean, Nikola might even be a fraud. Who knows? At this point, it's just an incredibly story-driven company. And if you're having to base your valuation on revenues and profits going out 10 years, it's not a realistic assumption. And you're not basing your valuation on that. Like, you're hoping the technology takes off. But I mean, Nikola doesn't have a product yet. It's absolutely crazy to have those valuations. And as I told you before, when a Nikola traded around $50 a share, that'll probably go back down to the single digits. And it's around like 20 bucks right now. It's well on its way, and it's going to go lower yet. So be careful with that one. But then, I mean, that's not the only one. People like to make fun of Nikola, but you have a company called QuantumScape, and they're trying to bring solid-state batteries to the EV market. And they're justifying their current valuation based off their 2028 sales and profit margins. I mean, that's wild. They don't even have a working prototype yet. You think that's going to go well? No, that's going to be extremely volatile and trade on the whims of the market. Same as Fisker Automotive. This company is trying to justify itself with 2024 sales revenue. I mean, that almost sounds reasonable after these last 2 companies, until you realize they haven't sold a single one of their electric SUVs yet. So I don't see that going well either. There's going to be massive fluctuations in there, and I would stay away from those as an investment, period. If you want to try to trade them off technicals, you know, whatever, trade away. But as investors, it's questionable, and it's super overvalued, super hypey, and I'm staying away. But here's the thing, you can no longer call those companies SPACs. I mean, and at the same time, most IPOs are expensive as well. Just look at Snowflake. That's got an EV to sales of 200. That's ridiculously overvalued. Or Zoom Technologies, which has been publicly traded for years now, and that's got EV sales around 100. I mean, yeah, I'm sure you're picking some expensive ones, but there's a lot of stocks with EV to sales of like 20, 30, 40. And that's historically extremely high. You have to have massive, massive growth numbers to justify this valuation that high. And I'm not seeing that across the board right now. And there's no way that, let's just say 50 companies are trading that high. There's no way all 50 of those companies are going to have a valuation, are going to have growth of like 100% a year for the next 4 or 5 years to justify that kind of price of the stock right now. It's just, the market's frothy. It's the way it is. So you got to be very careful as an investor. But that's why I'm excited about investing in SPACs. I mean, the real SPACs. I mean, as long as you buy close to the net asset value of the SPAC, you know, essentially the cash in the bank, and for most of them it's $10 a share, you get downside protection in the way of cash. Like, I mean, it's cash. You get it returned to you after 2 years, generally, if a deal doesn't happen by that time. And if a deal does happen, usually it bounces 20, 30%, maybe sometimes 50%. And that's easy money. That's the kind of risk and reward that'll make us rich. Like, your risk is close to zero. Let's say you buy like $10.50. You have 5% risk, and you're going to make 20, 30% if a deal happens. And, you know, that's just what you want to do. That's what investors you look at. You want to see a good risk return profile. Like, 5 to 25, like that's pretty good. 1 to 5, you're gonna take that all day long. And it'll make us rich. And you can increase the odds in your favor too, because some of these stocks, some of these SPACs aren't going to affect a merger. It's just the way it is. And if you want to know what the most important factor to determine the future success of a SPAC is, please watch the video that I have up here. And I'll tell you the one factor that really decides the success of a SPAC. So just be careful when you hear people talking about SPACs being expensive, because they probably don't know what they're talking about. They're talking about these companies that are trading that went public through a SPAC vehicle. Like, yeah, those companies are expensive, but SPACs themselves, the blank check companies with cash in the bank, they're not expensive. They very rarely deviate from the cash in the bank, the $10 a share that they have. So just be aware when you hear these things. SPACs, not expensive. They're not in a bubble. They're actually a great opportunity that I really like, and I hope you can get into as well and profit. So until the next video, cheers.